Hello, welcome back to Learn Economia. In this video, we are going to answer the question, what is the welfare loss of taxation? So we know that when our income is taxed, we will feel a loss in our income. So that means that our well-being or our welfare is suffering a loss. We are discussing that concept in this video. Let's get started. Welcome back to Learn Economia. So let's go to the video. Welfare loss of taxation is something that deals with decrease or reduction in your economic or social well-being as a result of imposition of a new tax. We know that we are living in a developing economy, and tax is not something that is seen in developing economy alone. We can see taxation in developed economies as well. So as we all know, they're having different types of taxation, like indirect tax, direct tax, etc. Basically, this is the basic classification of taxation. We know the taxation reforms in India. We know about the introduction of GST, all the kinds of reforms happening as a result of taxation. So when there is an introduction of a new tax, what is it leading to? Definitely there will be a welfare loss, whether it is imposed on a corporate body or whether it is imposed on individual or whether it is imposed on some other economic entity. Whatever it may be, the entity on which the tax is imposed would suffer a loss, and that is a welfare loss. So coming to the welfare loss of taxation, this is something which deals with the total cost which the society incurs as a result of transferring the purchasing power to the body or to the entity which is imposing the tax. If you are paying tax to the government, that means that when a new tax is imposed upon you, there is a transfer of purchasing power from you to the government, right? So these costs would consist of economically productive activity which would be foregone and real resources consumed either by the process of taxation or by the compensating behavior of workers, consumers or business in the response to tax. You know that when you are paying a particular sum of amount or a particular sum of money to the government, that amount is actually, this amount would have an opportunity cost, the next best opportunity forgone. If you are not paying the taxes, what will happen? You could have used this amount for some other transaction. You could have used this amount for purchasing some other commodity. You could have used this amount for purchasing some raw material for your industry, so or your company. So definitely whether it is for an individual or for a company or for some other economic entity, taxation will definitely have taxation will definitely lead to an opportunity cost. This is not the only cost imposed by taxation. There are many other costs as well, and we will be discussing all these in detail in this video. So we know that taxes are collected basically by the government, and why taxes are collected? It is to redistribute income. That taxes are collected, the tax you pay to the government would be collected by the government, and government will be paying to the public in forms of public expenditure, right? The government will be spending a lot in terms of public goods. The government will be spending in terms of education, in terms of infrastructure development, all these kinds of things the government is spending. So there is something known as public good, where there exists a provision of non-excludability criteria and non-rivalry criteria. So as a result, you nobody will be exempting you from consuming the public good just by telling that you have not paid for it. So all these public good is actually a new concept. It is actually an entirely different concept, but this is something, this is related to taxation. So let's come back to the taxation and the welfare loss of the same. We know that taxes are collected by the government to serve a variety of needs. It is collected to attain equitable distribution of wealth. It is collected to transfer wealth from subjects to ruling classes. All these kinds of things are right there, right? So we have to see that even though all these things are there, the imposition as well as implementation of tax is actually something which lead to a very costly process. So these costs could be thought as transaction costs of the tax side of public finance. Several types of costs can contribute to the total cost of taxation. There are deadweight losses. We know that how deadweight loss as a result of taxation would lead to consumer loss as well as producer loss. I mean, when there would be a loss from the side of consumer and also from the side of the producer, which again totally will lead to the social loss, I mean total social loss, which lead to the loss of the entire society, which is known as the deadweight loss. And also welfare loss in the related markets would be there would be compliance costs, there would be administrative costs, there would be tax evasion costs as well, and also there would be tax avoidance costs. So there is a difference between tax evasion cost and tax avoidance loss. Tax evasion means that you are actually you are someone who should be taxed, but you are escaping from tax. That means that you are that that escape is something which is illegal. Okay, tax evasion is something which is illegal. And what does it mean that by what does it mean by tax avoidance? Tax avoidance means that you are escaping from tax through legal means, and that is something legal. You are finding some loopholes, and you are escaping from paying tax legally, and it is through legal routes that you are escaping. And tax evasion is something illegal, and tax avoidance is something that make you escape from paying taxes through legal routes. That's it. So these kinds of taxation related costs are something which are borne by the taxpayer as well as the entity which impose tax upon you. So it can be either way. Mostly the burden of taxation is uh, felt by the person or the entity which pays tax. So we have to see that these arise from two principal sources. The act of taxation itself consumes some kind of real resources. People would adjust their economic behavior in response to tax, leading to opportunity cost. This is what I have told you. Because you know that you will be taxed. As a result, you have to see that tax evasion is something that is very much illegal, and if you are evading tax, that means that you are creating a nuisance in the country, and you are against the development of the country, and as a result it is actually an offense. So you have to pay tax. So when you pay tax, you are foregoing some amount which otherwise you could have used for some other thing, or you could have used that amount for purchasing some other commodity, or you could use that amount for purchasing some other service, or whatever it may be. Anyway, you cannot use that amount because you have to pay this in the form of tax. As a result, you have to make adjustments in your spending pattern, right? So there is some kind of discouragement created as a result of tax, right? And the consumption of real resources by activities is something which would be encouraged or discouraged as a result of the amount of tax or the proportion of tax. You have to see that some of these some of these changes in your behavior might be considered positive in the presence of externalized cost, or benefits to activities means discouraged or encouraged, and this might offset some or all of the social cost of taxes in the form of like what you say as Pigouvian tax. So Pigouvian tax, subsidies, all these things are, we have been discussing all these concepts repeatedly, so I don't want to go to the details of that. Again, externality, it is not a new concept as far as learn economy is concerned, because we have been I think this is a novel discussed topic, because we have been discussing this topic again and again. Why I have been taking this concept is because this is and where this is a very important concept, especially while we are promoting sustainable development, while we are promoting protection of environment, while we are actually suffering many ecological and environmental damages. So net of all these kinds of externalities, which are something which you cannot cost, or which you cannot price, all these kinds of things have to be taken into consideration while we deal with all these kinds of concepts, especially the welfare loss of taxation. So the net of such externalities, the cost of taxation, would represent a social welfare loss, and these costs are very much important in the design as well as implementation of the optimal level of taxes. When the government goes for optimal level of taxes, you have to make it sure that there is some kind of Pareto optimality condition. That is something you have to see. But as you all know, Pareto optimality condition is something that is always ideal, and it is almost impossible to attain the Pareto optimality condition by satisfying all the three criteria which are specified in the Pareto optimality conditions. So as a result, what we go is for, like, it is second best, right? The second best opportunity or second best option. So I don't want to go to the details of all these kinds of things. Pareto optimality is actually a separate concept, but related to this, and second best, the idea of second best too is another different concept, but definitely all these are connected. um, if you want me to go through these concepts, I'll definitely take up these, and we'll do the same. We'll do videos on the same. You can comment your views on the comment box. I'll be taking it up if you want me to do videos on that. So coming back to what is known as the cost of the welfare loss of taxation, or the cost of taxation. Coming to the categories of social cost of taxation, we could see that this is basically welfare loss. Okay, welfare loss, the cost that would make up the total welfare loss of taxation, and this can be categorized into different groups. The welfare loss of taxation in the tax market is the welfare loss of taxation that most economists talk about, and this is something which represents the total welfare loss. You are looking loss from the side of producer, you are looking loss from the side of the consumer, and you will total it up, you will get what is not of the total cost of taxation. Okay, that is not as a deadweight loss. Coming to deadweight losses and other some kind of distortions, especially the microeconomic distortions, you can see that this deadweight loss, as we all know, this is a concept that we usually see in microeconomics, and also in environmental economics we see the concept. So this can occur anytime in the market. So anytime this can be occurred when the market price and the quantity of a good are held apart from the equilibrium price and quantity. You know that when the supply of a commodity equals the demand for a commodity, the supply of a commodity and the demand for a commodity will come to a particular point. I mean, when both of these things meet, we can obtain the equilibrium price and equilibrium quantity, right? So but here, during the process of or during the presence of externalities, we can see that there exists some kind of external cost or external benefits. So in this case, especially in the arena of welfare economics, you can see that this need to be captured, and this is captured in the forms of tax or subsidies. In welfare economics, all these kinds of things could be calculated or depicted graphically by using several tools. Okay, so the difference between the total economic surplus generated by a market with or without tax, that you have to see, and the difference, this difference will show whether there is loss or not. So this is based on the amount of consumer surplus and producer surplus. We could see how deadweight loss is causing some kind of reduction in your consumer surplus and producer surplus, and when there is an imposition of tax, right? So we know all these kinds of things. If you want me to do videos on consumer surplus, producer surplus separately, just comment that in the comment box. I'll be taking it up if you want me to do these kinds of videos. So we can see that because the tax drive a wedge between the price that buyers pay for a commodity and the price that sellers would receive, there is a deadweight loss. So this there is a deadweight loss in the sense that anyway buyers would be paying for the commodity, but the entire amount that buyer pays for a commodity is not received by the seller who sells the commodity. So there is some leakage, and this leakage is in the form of tax. Buyer is paying but the seller is not receiving, but the government is receiving this sum, creating a deadweight loss there. And deadweight loss tend to increase the direct proportion to tax rate. So that means that the deadweight loss, it is something that increase in direct proportion to tax rate. If the tax rate increases, deadweight loss too increases. If the tax rate comes down, then deadweight losses also would come down. So that both of these things move in the same direction, and that too in direct proportion. We can see that because changes in the after-tax market price and quantity of the tax could impact demand and supply conditions for other goods. Here, when I say other goods, we are dealing with the substitute goods as well as complements. I think you know the difference between these two things. Substitute means tea and coffee, perfect substitutes. To an extent, perfect substitutes. I'm not telling that these two things are perfect substitutes, because there are people who are addicted to tea. For these people who are addicted to tea, they can't substitute coffee. They can't substitute tea with coffee. So but these are, to an extent, these are considered to be substitutes. And coming to complements, these are commodities that are jointly used, like for example pen and ink, car and petrol. So pen and ink and car and petrol are something which are considered to be complementary commodity or complements. um, so I think you know the difference, so I don't want to go to the details of these kinds of things. If you want me to do if you want me to explain all these things in details, so you can comment in the comment box. I'll be taking your doubts, your queries, your concerns, etc. I'm really happy to see all those things, because if you're listening to this and if you are having doubts, that means that you are trying to understand these kinds of concepts. So I'm really happy to help you people. If you want me to explain, that's it. So coming back to the concept again, the deadweight loss, taxation cost, opportunity cost, all these kinds of things, you can see that additional losses might be incurred to the extent that the process of adjusting all the impacted markets to the after tax kind of situation from the initial equilibrium may itself be costly. So there would be an initial equilibrium, and when there is an imposition of new tax, that means that there is the new equilibrium is disrupted. Whether the economy will attain a new equilibrium point or whether the economy will come back to the original equilibrium point, all these kinds of things are something which need to be questioned, and all these things would depend upon the optimum kind of taxation, whether the economy is going through the same, or whether the economy is imposing the optimum tax or not. All these things are something which depend upon that. Coming to the administrative cost, when many people might think that when the government imposes taxes, there is no cost as from the government side. The government is incurring no cost, but the answer is no. The government is definitely incurring cost. Creating and implementing tax involves some cost on the government, because it is a legislative process. There is some kind of documenting happening. There is some kind of physical collection of tax happening. There are agencies which work to find the tax evaders. So there are agencies which will impose penalties upon the tax evaders, where there are agencies which will punish the tax evaders. So you have to ensure that all these kinds of agencies are working. So this would create some kind of administrative cost to the government, and these costs might vary based on the efficiency of the tax processes. Also, it will depend upon the degree of voluntary compliance with tax. For example, if all the people in a particular nation, they feel that I should contribute to the development of the nation, I shouldn't evade tax, so I should pay my tax. It is my moral responsibility to pay tax. If all the people in a nation feel so, and if all the factories or all the companies in a particular nation feel so, and they voluntarily come and pay their tax, that means that the duty and responsibility, it is not the responsibility, the problems to the government is coming down with respect to finding the tax evaders, punishing the tax evaders, imposing penalties upon the tax evaders. All these things are reducing, right? But if most of the people in a country are feeling like I should reduce, I should try some means to evade tax. If people are thinking in that manner, that means that the burden of the government is increasing. The burden of the government is increasing to find the tax evaders, to penalize the tax evaders, to punish the tax evaders, etc. Right? And coming to another kind of cost, apart from administrative cost, opportunity cost, you have compliance cost when you are imposing taxation. And what is compliance cost? It is something which is related to administrative cost, because these would represent the administrative cost of the tax which has been externalized on those who are taxed. And what are included here? It would include the cost of producing as well as storing any accounting records, forms, tax returns, etc. You have to maintain some records, right? You have to maintain a record of your taxpayers, or the ones who are paying taxes to the authority. So this would include some agency costs arising from taxes administered by the third parties, employers, etc. So these costs would actually differ based on the complexity and specific requirement of tax code. You know, you have to see that how GST is different from sales tax, and when GST came, how sales tax was removed, or and how several other taxes were removed, or how several taxes were replaced by GST. So actually you have to see how one tax is different from other, and the cost of one tax is actually something which would differ from the cost of some other tax. All these things you have to keep in mind when you are answering the question which deals with what to say, the cost of taxation. Next, you have avoidance cost. As I have already told you, this is something, tax avoidance is something which is entirely different from tax evasion. Avoidance costs represent the transaction cost and opportunity cost arising from any transaction that would take place for the purpose of reducing one's tax burden. You will be finding some loopholes in the law, or in the law telling about who all should pay tax, all these kinds of things. You will go through all the laws, and you have to see some kind of loopholes there, and you will try to avoid taxes by going through the legal manner. So examples here, and that will make you incur some cost, and this is known as avoidance cost. You are trying to avoid your tax, and as a result of that process you are incurring some cost, and that is known as avoidance cost. Examples would include holding on to the capital gains longer than the investor would otherwise prefer in order to get a lower tax rate. So all these kinds of things, and then investing in tax advantage assets, um, all these kinds of things, and searching for the tax advantage assets. You are actually seeking more information from the market. You are consulting some agencies in order to understand which is the tax advantage, which are the tax advantage assets. So as a result, you are incurring some cost, which is known as the avoidance cost. And the cost of any action that the taxpayer engages voluntarily in order to legally reduce their tax could be included here. Then is evasion cost. You are actually moving through an illegal manner. You are not ready to pay tax, and you are ready to take all the means and ways to escape from tax. And but it is definitely illegal, but you don't want to pay tax. As a result, you will be incurring some costs. You are hiding your money, and for that you are incurring some cost, which is known as evasion cost. And this is something similar to avoidance cost, but not the same. Here, the cost of some activities which are definitely something for tax evasion, and this would include cost of some activities by the taxpayer in order to avoid the detection of your illegal money or your black money or the money that you had received as bribe. So you are hiding your money. So for hiding your money, you are incurring some cost. That means that this is evasion cost. Okay. So that's all about the cost of taxation, your welfare loss of taxation. Anyway, whatever cost you incur, which deals with or which is related to taxation, that is a loss of your money, right? The cost means that the money is flowing out of your pocket. That means that you have to cut short your expenditure to the extent of the money that had flown from your pocket. So that's it. Anyway, it's a loss. So it's a welfare loss when money flows out of your pocket. That means that you are sad. It's a welfare loss, right? So that's it. That's all for today. Please like, share, and subscribe to this channel for more videos, and you can be a part of my Telegram channel and Telegram group to discuss your doubts. That's all for today. Thank you. And I'll be providing the links of both my Telegram group and Telegram channel in the description box. Thank you.